Okay, hello everybody, this is Lars Fontinen from www.whentotrade.com. I just want to give you a short demonstration about cyclic analysis and how it have been able to forecast the cyclic swings in the markets during September and October of this year, so for the last 2 months. So I did a sentiment cycle analysis at the beginning of September the 2nd. I present different techniques in my book, and one of the technique is to analyze sentiment cycles based on the fear index, or the so-called VIX index, which is measuring the volatility. So this is the chart of the VIX index on a daily chart, what you see here, and I just applied one of the dynamic cycle explorer tools, which is able to automatically detect the most dominant cycle which is active in the market and is able to forecast this cycle into the future. So you see the cycle analysis was done on September the 2nd, where the blue dot here is located. This was the actual situation in this index here, and it showed that we are approaching or at an important low of this index and then approaching an upswing until the beginning of October. So if you are familiar with sentiment cycles, you will know that the markets behave exactly the opposite. So if we expect then sentiment cycles low as pointed here in the beginning of September, this means that we would expect a market high in the major markets like the S&P 500 or the Dow Jones index. And exactly the opposite would be expected at the beginning of October, where we see the dominant cycles high in the sentiment index. This would correspond then to a major market low in the beginning of October. So what we have here is a market forecast done and based on cyclic analysis, which points to an important market high in the beginning of September and an important market low in the beginning of October, done just based on the cyclic tools. And to show you that this is not an review of what would have worked, I show you this forecast what issued in advance. So I posted this chart to the public, to the Cycles forum on September the 3rd, as you can see here on this post. This is just a screenshot of the post in the forum, which is available for every user here. So I just posted this chart, exactly what I've shown you just as a picture here. It's mainly the same. I just said no comment needed because when you're familiar with this type of cyclic analysis, it's very easy to read that you expect the top here in the market and the low here, exactly vice versa as the sentiment cycles are. Okay, this analysis was done very simple in the beginning of September. Now let's have a look how this would have played out. This is just a closer look of the same analysis, just a little bit zoom in. We only see the period from August to October here in 2011 this year. Here down below you see the VIX index here as seen before. This is a cycle forecast from September the 2nd. As you can see here, this was exactly the date of the forecast. Here you see the cycle forecast, which projected the major low in the sentiment cycles here in the beginning of September, 5th of September, and the forecasted sentiment cycles high at the 1st of October this year. So exactly vice versa on the market. So we would expect the market low here and the market top here, as I've marked here on the Dow Jones index chart. So this is the forecast we had at the beginning of September. Now this is the result. Quite simple here. So this is exactly the date as it was forecasted for a market high. This was exactly the date for the forecasted market low, and you see the market run up just after this forecasted low here. So this downswing and this upswing have been exactly on track as the cycles projection have been. So here you see again just a simple example of how good this cycle analysis works with my new cycles tools. So this is just the same chart that you see here, the volatility index made a top exactly on the same date here as projected and just run down here, as you can see here, and the markets run up. So the projection on the volatility index just perfectly matched to the markets. What I've shown you here is a simple technique which I describe in my book, so that you use cyclic analysis on the volatility index or the sentiment cycles and use this forecast to trade the markets. So okay, let's just add a short live demonstration here to show you that this is not a fancy cycles tools. This is just simple. So I've just prepared here the volatility index in the Wave 59 trading software where all my cycle stuff is in. You see here the chart, and I've just prepared that we are here on September the 2nd, which is the actual date where I did my analysis. All what you have to do is here to apply the cycles tools, which is included. So it's not only a book, it's a complete tool set which technical analysis and cycle analysis algorithms in. So it's a lot more than just a book. And the dynamic cycle explorer here is a technique I showed you on the chart. What you do here is just a preset. So you don't have to know the dominant cycle length. The tool will all do on its own. It will detect the dominant cycle, will make a phase adjustment, an amplitude adjustment. You just use a preset here. I do nothing fancy, press OK, and simply choose this major low here in this index as starting points. So now the analysis is done completely automatically. And I will not explain the different charts, but what you see here is an outcome is exactly what I've shown you on the picture. So there's not a lot of fancy or hidden know-how used by this forecast here. This is just applying the cycles tools which I have developed to do this kind of analysis. And exactly here you see the forecasted low in September and exactly the high in October. This is how I've showed you this. So this is just the usage of the cycle tools here. Okay, and you see here the market result. So thank you for watching this little demonstration, and bye.